join the call. From Fakeeh's management, we have Mr. Panas, the Group CFO, Professor Ayman Abdo, SVP, and Mr. Waleed Ahmed, IR Director. We'll be having a presentation followed by a Q&A session at the end. Without any further delay, I'll hand over the mic to Mr. Waleed to start the proceedings. Waleed, the floor is yours. Please go ahead.
Assalamu alaikum and good afternoon, ladies and gentlemen. I'm Waleed Hamid and I'm the Investments and Investor Relations Director of Fakeeh Care Group. Thank you for joining our results call for the first half of 2025, ending the 30th of June. And I would like to extend my gratitude to Rajhi Capital for hosting our call today. So before we begin the presentation, I'd like to company, we're bound by regulatory requirements regarding forward-looking statements. So please refer to our disclaimer statement at the end of our presentation that we're presenting today. That will be posted on our website later today. Professor Ayman will kick off our presentation today with a brief overview on the group's value proposition and strategic updates, followed by a deep dive into our results by Mr. Panos. Afterwards, we'll open the floor to your questions. I will now hand over the presentation to Professor Ayman.
Masā al-khair. Good evening, everyone. Great to be with you again, and thank you very much for taking our call this afternoon, warm afternoon in Riyadh and wherever you are. Exciting day for us. Very, very happy and pleased and enjoying our presence with you. They say there's never over communication. So I'm sure many of you have seen this slide before, but we really like to start with it because it summarizes our DNA. Basically, in describing ourselves as a healthcare system rather than just a healthcare provider. So really our core engine is our hub and spoke model in which we provide healthcare. This gives us access to all levels of healthcare, from primary care, somebody just has a sore throat, all the way to robotic surgery, which we have introduced in the private sector in Saudi Arabia, cancer care, organ transplant. So this gives us access to the entire patient journey. This gives us capture of all value chain and potential revenues. This gives us ability to interfere in the healthcare system. So by that, we have currently 4 running hospitals, and the beds around full capacity of 853 beds, more than 300, almost 400 examination rooms. And this has gained a huge reputation over the years. Coupled with that, we have the ecosystem of the enabling companies like home care company, like emergency medical services, like the IT company, like the optics company. So these give a full integrated healthcare platform that captures the patient journey and interferes in their care. That has subsequently financial implications. This is coupled with the academic arm, which includes a very robust undergraduate medical education arm, postgraduate medical education arm, clinical trials, innovation, and so on. So that's our base, covering really the entire horizon of healthcare. That has been coupled by a relentless investment and commitment to quality and patient safety. That has led to all these decorated numbers of accreditations by national and international. In most of them, or many of them, we were the first to get or the second to get, really indicating our significant commitment to quality. And we're going to give an example very shortly. This all is recognized by patients and by students in terms of attraction of patients, high standards, quality of care, safety, and experience, and then retention of patients, which can be reflected in the huge growth that we are seeing. Next slide. So, just as one example of the huge list of accreditation trophies and recognitions that we've had is this very unique accreditation, and this really addresses the system itself, the group itself, the connectivity of the group. So this, if you like a franchise accreditation. So many hospitals in Saudi Arabia and everywhere has JCI accreditation of the hospital itself. In fact, Fakeeh in Jeddah was the first ever in the private sector to receive JCI accreditation tens of years ago. But this is the first time that any private hospital in Saudi Arabia, and only second to one other governmental hospital, that gets this so-called JCI enterprise. So this basically screens the entire group in terms of governance, communication, policy procedures, financial standards, contracting, everything. And they basically scrutinize the entire group and make sure that the standard of care is equivalent wherever you go. So it's basically really more like a franchise kind of a system approach. So patients and clients can be assured that wherever you go in the network, you are receiving the same quality of care, receiving the same safe care. So we're very, very, very proud to have that. During Hajj, we were very busy. We had about 4 or 5 projects running, but those are the 2 most important of them. The one on the right is that we operated Namira Hospital in Arafat. This is a very critical hospital because it's in the middle of Arafah, and Arafah is the most important day in Hajj. We operated this as an ESG, so that's free of charge as part of our community service. And it was recognized by the ministry. We received the significant contribution Hajj award from His Excellency the Minister about 2 weeks ago. The other very important project was the EMS project, Emergency Medical Services. So we got this contract sometime late in April, and in about a 3-week to 1-month time, we were able to fulfill it. And this required recruiting around 3,600 paramedics, deploy them in Mecca, Mina, Arafah, in an ambulatory setup, and with all the communications and the activities and the equipment and all that. And that was a very, very challenging contract for us to deliver, and we were extremely honored to succeed significantly in that. Another project that we did was also mobilizing around 30 ambulances during Hajj. We did some other minor projects like pods that we deployed in different locations, and active participation of taking care of the guests of the Ministry of Hajj. So we were very busy in Hajj, and we were very proud to do so. Next. Other exciting news is the inauguration of Medina Hospital. So that was a very important and well-awaited moment for all of us. It's a beautiful, smart hospital. The initial operation was around 48 beds and around 30 plus clinics. Operations started on most clinical services. Of course, some clinical services are building up. Basic, primary, secondary, tertiary care. But the business model was also built on what Medina needs. As you know, Medina is lacking many significant and important healthcare services. We identified that oncology was a big one, so we've invested a lot in oncology and in radiotherapy. So it's probably one of the only radiotherapy centers in Medina area. Also investing in surgery, in ophthalmology, and in many of the others. So it's a basic hospital that has all basic specialties from primary to advanced care, but specializing and more focusing on the areas where Medina people need it more. So we're very excited. We can talk more about it in questions and answers. Insurance contracts has been finalized, and the hospital is rolling up as we speak. The other exciting news or a project that you probably heard about was a build-to-suit arrangement with a Nari group, specifically Yusuf al-Nari, to finish and operate this mega outpatient center. This is among one of the biggest that we will have. Contains more than 60 clinics, all kind of specialties, a very sophisticated setup, excellent patient experience, and it is very strategically located in Zahra. We can also talk about this a little bit more. So this is going to be a very important outpatient outlet for us, adding a fifth DCFM, we call them DCFMC, Dr. Soliman Fakeeh Medical Centers, in addition to the ones existing. I think this ends my highlights. Yeah, and so now to the more exciting part with Mr. Panos. Panos.
Thank you, Professor Raymond, and good afternoon, everyone. The group delivered a very strong second quarter, driven by growth in patient served across all our facilities. We served 16% more patients compared to prior year, growing our revenues by 24% to 812 million Saudi riyals. And as a result, in 1H, patients served increased by 8%, overcompensating the Ramadan and the Eid seasonality that took place in the previous quarter, and also growing our revenue by 13% to 1.5 billion Saudi riyals year to date. Revenue growth during the quarter trickled down our income statement, whereby gross profit and EBITDA grew by 12% and 11% respectively. While on the first half of the year, our gross profit increased by 2% and EBITDA slightly declined by 3%. Medina opening was a key reason behind the year-to-date dilution, and that we'll discuss further in the coming slides. Finally, net profit year-to-date grew by 31% to reach 136 million. And this growth was fueled by mature business growth, lower financing costs, and elevated finance income on the back of our cash balances. Accordingly, attributable net profit reached 154 million and is 28% up year on year on the back of a 73% growth in the second quarter, namely 82 million attributable profits. In this revenue slide, we try to give more highlight which of the business grew more. Of course, our healthcare segment, which is our biggest segment, grew grew to 1.4 billion riyals, which is 14% year on year. This growth was primarily driven by the Jeddah hospital and business overall, double-digit growth during the quarter, which is coupled with a growing contribution from our hospital in Riyadh. As a group, we continue to see optimized case mix that support our segment overall growth. It's worth mentioning that you can see that both the medical-related services and the education segments both grew, and we will discuss later in other slides. If we go to the next slide, we want to take you through our census. This is very important for our business. The growth in the healthcare segment was driven by group-wide increase in patient served. In the second quarter, outpatient visits and inpatient admissions rose 15% and 16% respectively on a year-on-year basis, translating into combined revenue growth of 18%. Year-to-date, outpatient and inpatient volumes increased 8% and 7%, while this translates to gross revenue growth of 11%. We had pricing and case mix tailwinds, which added support to the average revenue per outpatient visit and inpatient admission, contributing 3% year-to-date on the consolidated revenue level. Our operational capacity expanded to 565 beds in the second quarter of 2025, up 14% year on year, as we added 31 beds in Riyadh facility, and we opened the first 48 beds in Medina Hospital. This capacity represents only 68% utilization of the 835 beds that we can service. Jeddah occupancy averaged 88% in the second quarter of 25, and Riyadh around 66%, including the startup dilution from Medina. Our group-wide occupancy was 8% during the quarter. Move to the next slide. Now here the focus is our Jeddah business. Jeddah remains the largest revenue center and contributor to the consolidated numbers. In the second quarter of 25, paid visits were up 14% across all the facilities, and our inpatient admissions were up 13% versus the second quarter of last year. We should note that the last year second quarter included more Ramadan compared to last year, included more Ramadan days, and this led to lower working days in the comparable quarter. That said, year to date, across our facilities in Jeddah, outpatient and inpatient census grew by 6% and 4% year on year, respectively, delivering 8% growth in gross revenues. We continue to optimize and utilize our brand in Jeddah, and this is a strong defender on the competition that it came and will come in the future. Moving to Riyadh slide, which is here we have the footfall of the Riyadh hospital, where we're pleased to see that our continuing momentum of the ramp up. The hospital, as I said, added 31 beds since last year. So we have 102 beds now operational, and our census, outpatient and inpatient volumes grew by 28% and 33%, as you can see year on year, leading to a first half of the year growth of 22 and 26% respectively. We'd like to note also that we had a significant growth on surgical capabilities and procedures, where, as you can see, they grew more than 100% year on year. And this proves the well-positioning of our hospital and the quality of the medical team that we have on the ground. Overall, occupancy stood at 61% in the first half of the year, compared to the 68% last year, as we expanded our bed base. We are about to introduce 16 new beds before the year end. We just finished the psychiatry unit, which we expect to be very popular, and we're expanding our oncology and IVF service offering in order to sustain our long-term growth. Moving now into the other business, of course, our education business continued to grow steadily, 8% year to date, driven by increased student enrollments. We had almost 1,800 active students. They were up 4% year on year, but we need to mention that we just completed our expansion, our new clinical skill center, which will open in September and will allow us to increase the student take up to 500 students. In tandem, our home healthcare business also maintained steep growth trajectory. It expanded in both locations and visits, where you can see more than 100%. We reached 86,000 and 40 million of revenue in the first half. This division is very promising, and we have currently 6 branches, and we are planned to add another 2 on the fourth quarter. But our target is to reach at least 13 branches by the end of 2027, create a nationwide coverage of this business. If you move to the next slide, please. Here, now we're talking about our costs and our profitability. Our cost of sales increased year on year by 28% in the second quarter. And also the gross profit margin for the period was 22.2%. Accordingly, the first half cost of sales also rose to 1.16 billion, and the gross profit margin was almost 24%, 23.6%. The increase in the cost of sales and the slightly gross margin dilution that we have was driven primarily by the new business portfolio, and especially the new opening of Medina Hospital, as capacity continues to be front-loaded and we absorb our fixed costs. Salaries, of course, was the main driver of the growth in the expenses. However, our integrated operating model and our case mix optimization help us to cushion these pressures, partially by absorbing almost 30% of the inflation cost. On an absolute basis, gross profit in the second quarter increased year-on-year by 11.6%, and in the first half by almost 2%, supported by the overall strong revenue growth in the period under study. In order to assess our current business performance on a gross profit level, excluding the Medina Hospital impact, you can see our margin, it was 24.2% of the gross profit in the second quarter, or 24.6% in the first half. Moving into the next slide. Here, we'd like to give you more detailed view on our EBITDA, which reported 11% growth to 129 million in the second quarter, and declined slightly in the first half by 3% on a year-to-date basis, where we posted 250 million of EBITDA. Our margin, we recorded a margin of almost 16% in the quarter and 16.5% in the first 6 months, slightly lower year-on-year as the new business dilutes the operational profitability, coupled with higher provisions for receivables due to our growth in our business. And as a result, our EBITDA figure also excludes the impact of our long-term scheme for our employees. It's worth to note here that we deliver, as we heard from Dr. Ayman, a successful Hajj project in June for almost 2 weeks. And this business, it was profitable, but it was not to the level of the EBITDA or gross profit that we have in our other business. To further understand our separation between new business and existing business, as you can see, our existing business grew 3% in the first half with almost 23% margin, while our new business were almost 63%, 63 million negative. That was said, the established footprint remains very strong and highly cash generative as the group advances its investment agenda, and we expect the spread between mature and new business to narrow as utilization builds up in Medina and Riyadh. In the next slide, we'll talk about our net profit, which rose by 59%, with a margin expanding to 8.4% in the second quarter from 6.6% in last year. Year to date, our net profit rose 31% to 136 million. Also, our margin expanded to 9% from 7.8%. This performance mainly due to the platform, our strength of our platform, and the lower finance cost and higher finance income. Also, our attributable profits to the shareholders grew 73% to 82 million, and also 154 million compared to 120 million in last year. This was due to Medina performance gets consolidated also in this quarter as we open the hospital in the end of April. Taking into consideration all this and the 30 million new shares that we issued last year during our IPO, the EPS read 67 halal in the first half and was up 14% from last year. I would like to move to the balance sheet. Our balance sheet remains and the liquidity very strong post-IPO. We closed the quarter with a net debt position of 104 million after offsetting our cash and Sukuk holdings. On a trailing basis, our net debt to EBITDA ratio stood at 0.2 times, excluding the leases, or 1.17 times if we include the future lease liabilities, retaining meaningful liquidity headroom through a combination of cash on hand and drawn facilities and our strong cash flow generation from our mature platform. Although we had a temporary increase in our receivables, our cash conversion cycle was efficient and we remain comfortable on our ability to fund our growth in Medina and the group's other initiatives within the balance sheet capacity. With all this, I would like to thank you for your time, ladies and gentlemen, and this concludes our management remarks for today's call, and we will now open the floor to your questions.
Thank you, Mr. Panos and Professor Ayman, for the detailed presentation. Before we open the floor for the Q&A, just general instructions. Please limit yourself to 2 questions. And to ask a question, you can click on the hand raise button or use the chat box. First question we take is from the line of Mashal. Mashal, please introduce yourself and go ahead.
Presentation. 2 questions from my end. One is on the profitability during the second quarter, and namely the gross profit. So we saw the pressure, and we know that we're front-loading for the medical centers. We have pressure from Medina, but is there any chance that pressure was partially as a result of the Hajj contract? How's the margin profitability there? I mean, I understand that a significant portion of the top line came from the Hajj contract. Could this further diluted margins, or we should look at the full year figure to be deteriorating in the same level we saw in the second quarter?
Great question. We hope our presentation will clarify this, but as you said, we try to give you guidance for our current performance and the future performance. Our overall gross profit margin, as we said even in the previous investor call, it shrunk, let's say, around 1 percentage point. This is our organic, I would say, pressure from absorbing competition, retaining our employees, and investing on our quality offering. Temporary, in this quarter, as you said, and we agree, we added business on the top line, circa 60 million or so, which did not have 25 or 24, whatever you will expect us to have a gross profit margin. So that's why you see this erosion in the margin. Nevertheless, this business are very, very important for us. It proves our capabilities to deliver under intense pressure for 2 weeks, 3,500 paramedics, and to look after also the Namira Hospital in Makkah for 2 weeks on a CSR basis. So all these are an investment to our future growth and similar events or opportunities that will arise from the government front.
Thank you, Panos. My second question is regarding Medina Hospital. So we rolled out almost, I think, 48 beds since we commenced operations. When do you expect to roll out the remaining? And citing what you guys mentioned last call, is that you think the ramp up of Medina will be faster than Riyadh. Are we still abiding by that statement?
You put words in my mouth. We're very happy with the Medina hospital. I mean, today we have the RO also board in Medina. I mean, if you see, it's a very beautiful hospital. we Unfortunately, we're a bit late to open. I mean, we opened in end of April. Nevertheless, we attract a very good caliber of doctors, and we open almost 30 of our clinics, and together with our 48 beds, and we are about to receive, hopefully next week, the first license in Medina for oncology. We're going to be the first. So this is, underlines, the quality of the offering that we bring to the Medina. Now, it took us a couple of months to complete the insurance contracts and the empanelment. So now we're all, ready and all the rolling up the sleeves to make sure that Medina will be a very successful hospital. It's too early to tell you it will be faster or slower, but it has all the credentials and ingredients to be a successful hospital.
Clear. We take next question from the line of Ahmed. Ahmed, please unmute yourself and go ahead. Ahmed, could you unmute yourself? Ahmed, I'm unable to hear you in case you're saying some. Okay, yes, now I can hear you. Go ahead.
Congrats on the results. I just had one question from my side. In terms of competition in the Western region, with Soliman Habib entering the Western region with 2 hospitals, do you see any threat to your market share or an increased competition? Any slowdown from existing hospitals in the Western region? This is my only question. Thank you.
Maybe I can take a little bit of this and then Panos.
Absolutely.
This is a serious concern. I mean, we look at all competition with respect. I mean, these are very respectful operators who have a lot of experience, have excellent offerings, and so this is definitely something that we think about. And as we mentioned, the DNA of Fakeeh is always to improve and to be the best, because in the end, the patients are going to be choosing where to go. To our maybe surprise and no surprise, the effect so far has been actually negligible. In fact, you'll hear from Panos now that we are actually growing in Jeddah, and I think this is a reflection. I'm only going to talk about the philosophical part of it, because I think the brand is extremely strong. People have huge trust, and we haven't been we've been lucky enough not to lose any significant star doctors or nurses or technicians, and that can account for what we described, the some increase in cost for retention. So I think that extra cost that is partially from retention of star doctors and excellent staff has paid off a little bit in the securing of losing patients or contracts to competitors, and have kind of shown us this holding and growth as well. So far we're doing very well in Jeddah. As we mentioned, next year we're going to have this big medical center that will also boost, and then in a couple of years later we're going to have our new hospital. Meanwhile, we're opening the Mecca Awali probably end of the year, very early next year, so that's also going to feed into the Jeddah hospital. And so I think the situation in Jeddah is quite quite secure and very, very promising. Maybe Paris can shed some more light on this.
You covered it excellent. I mean, the points is, as you said, doctors, the trust, the cost, and more points of sales. You didn't mention the surgical tower. I mean, we are very happy with the demand that exists in our facility. And I mean, as you mentioned, 88% occupancy level, and we try very hard, to satisfy all the demand. So we are pushing faster for the surgical tower expansion. We got the approval from the municipality. So now we're entering, the last phase of refreshing the design and moving ahead. So we address competition with quality and trust, and everyone will do business. But probably margins will be a bit lower than we used to enjoy. I think this is in the end of the day, the cost of the competition.
The other point I think is capacity, because every time we say to investors, there's also concern. Of course, we also lose sleep sometimes on capacity and market and need. You'll see that these hospitals are doing well and growing. So which really tells you that the market is hungry still for high quality hospitals. So that is also reassuring in itself.
Thank you very much. Perfect. Thank you. All the best.
Great. Thank you.
All right. Next question is from the line of Ibrahim from Al Jazeera Capital. Ibrahim, please unmute yourself and go ahead.
If you could please share the contribution of the Hajj contract on the gross level, on the gross profit. Am I audible, by the way? Sorry. Yeah, sure.
No, that's any other question?
Yeah, and I was wondering if there are any negotiations on the horizon for the Jeddah facility, particularly.
Negotiations? What do you mean negotiations?
Insurance on the Jeddah facility.
Okay, let's start with the end. I mean, our relationship with the insurance company is very close. I mean, especially with all, but also especially the two big ones, and is active. But we have contracts, and our contracts are 3 years. I believe we're in the second year of the Bupa contract, and now next year we have probably a renewal with Taunia, but we haven't started yet discussions. But typically, our partners understand our cost pressure, that there is inflation everywhere. I mean, and there is the quality. So we find a very mutual beneficial solution in our relationship. So we don't see any challenges coming from that side. Although competition is always helping, the insurance companies, and is not helping us. But nevertheless, the quality and the demand and the appetite for Fakeeh care is very, very strong, and this is also supporting us. On the Hajj, we cannot disclose the exact result because we haven't closed the results yet. Still, there is a process with the authority to finalize the billing and everything, the review of the contract. But as I said, it was well below our profit margin of the 25%, well below. But it was positive, and anything positive that increases our profits is welcome. And as we said, this is an investment rather than a killing to want to do on any contract. Is a long-term investment. Is a partnership with authorities to deliver on need. So this is what we prove that we can deliver, and that was one of the most successful Hajj seasons ever, and we get awarded also for our contribution. on the Hajj project. Thank you.
That's very clear. Thank you. And if I could squeeze in one half a question, could you please share the beds that are currently operational at Riyadh?
The bed in Riyadh? In Riyadh?
Yeah, the operational beds out of the total capacity.
There are 102 beds operational. And we said we're going to open now 16 new units, psychiatry unit with 16 beds. So we'll go 180 beds by the end of the next month.
Thank you very much.
Thank you. Before we take our next question from the chat box, just wanted to remind the participants, if they have a question, they can use the hand raise button or they can use the chat box to post that question. Next question I'll take from the chat box. This is from Abdul. It's about the Riyadh hospital. The question is, if since you have added new beds in Riyadh and the growth has been really solid, volume growth, why is it that it is still loss making?
Very good question.
Talk when Panos can talk. Again, I think we mentioned this many times, and maybe just back to Mashaar's question. We never said that Medina is going to ramp up quicker, but what we said is, greenfield versus brownfield, if you like, are very different. So, the gap or the expenses or the loss in Medina is definitely going to be more controllable and less than Riyadh. So again, I just like to remind everyone that Riyadh Hospital was bought with already staff there, relatively expensive staff, with very high commissioning cost and a lot of activities. We had to really have a very low volume months until we reinstituted the insurance contracts, change some of the doctors, get the momentum up, morale of people, and most of the first year has been just trying to revive this hospital back and to improve. There was some contracts in the lab and radiology and so on. So I think that we lost a year doing that. During that year, there was cost all the time, running at quite high levels. When you try to correct that, it's not easy to correct. So I think that's one factor. Factor two, when you're the newcomer, you need to spend a little bit in marketing. You need to spend in attracting doctors. What we just said about Jeddah, we're going to say the opposite now. So, we were able to retain our staff in Jeddah. So people are doing the same job, retaining their staff. So you have to really kind of beat the market to get the star doctors and the star staff. And it's not only doctors, one super excellent infection control nurse makes a huge difference. If you go and do a plastic surgery and then get an infection, it's a disaster. It ruins the reputation of the hospital and the doctor and so on. So I think that's another factor. We spent quite a bit of money on marketing. So I think now, with this growth we're seeing, I think, revenue always lags a little bit behind volume. We try to focus on patient experience, because if the patient comes once, they will come again because they like the hospital. And so, I think we're off to a good start. We're adding now the psychiatry beds. We're going to add more and more services. We're continue to recruit star doctors. It wasn't an easy endeavor. You are 100 bed now in 105 hospital city. So really, it does. It's quite a challenge to run. Maybe Panos can add, or Walid can add some comments.
You covered very well. I just want to say that also, Riyadh market is different from Jeddah, and one is that, as you said, we don't need to. The marketing in Jeddah is the Jeddah people. In Riyadh, we need to market the hospital. We need to make it well known. It was our first footprint in Riyadh, in a very competitive market. So we didn't expect to be easy, but we are very happy with the achievements and the top line. So now we're on the trajectory where we are almost there. I mean, either this quarter or January or whatever, let's say maybe January, we're going to be EBITDA break even. I mean, we have the momentum. We're adding the new beds. We have the capacity to utilize the existing staff. So we're there approaching now, and we are very transparent. And the hospital has also debt, so it will take time to repay the debt. But the EBITDA level, we're going to be positive soon.
Thank you for the detailed answer. There's another one in the chat box. This is from Alanod. This question is related to Bupa's no pre-authorization contracts. We have seen more hospitals, taking on Bupa's no pre-authorization contract. Any thoughts on that? And would it drive away any traffic from your hospitals? Is that a possibility?
Yes, I will take this. I will be very careful what to say because the Bupa colleagues are friends of us. So, look, we are a hospital and Bupa is insurance. So everyone has to take its own responsibility. So we take the responsibility to look after the patients, and Bupa has to take the responsibility to insure them. So if we gonna sign this contract that offers to other hospitals, we take the responsibility of the insurance company. So we say no, we are a hospital. So everyone has to assume its own responsibility. We might have some impact. Some hospitals opted for this contract, and they might see some footfall. But we're busy. We're happy with our business. We're happy with our margins, and we maintain our course. How we build up our brand and reputation.
Clear. Before I take the next question from the chat box, reminder to the participants who have already asked question but have not lowered their hands. If you have a follow-up, please rejoin the queue. All right, so I assume there is Ahmed as a follow-up, so I'll unmute the line, Ahmed. Ahmed, please unmute yourself and go ahead. Ahmed, could you unmute yourself? In case you do not have a follow-up, please lower your hand. All right, so no response from Ahmed. I assume he doesn't have a follow-up. Okay, so I'll read out the question in the chat box. This is about the value-based healthcare. As we all know, one of the goals of Vision 2030 is moving towards value-based healthcare. Can you explain how are you better compared to your competitors, or talk more about your operating model, which gives you an edge compared to your peers, as we move towards this model of value-based healthcare?
Prof. Ayman, you want to take this question?
Yes, I'll try. So this is a complex issue, but honestly, this is absolutely from the heart, and we have the evidence for it. There is nobody who is more prepared to do value-based care than us. And I think to do proper value-based care, you need to have like 5 or 6 major components. So the first component, you need to have quality of care, because you cannot do value-based care when you have a low standard of care. So I think all the big 5, 6 providers, who really have high quality care, we claim that we have probably one of the best qualities, and I think that's been attested by the rankings, by the accreditations, by everything. So high quality of care is very important. And then you need to have good measures. So you can measure costs, you can measure outcomes, you can measure KPIs, because you cannot do value-based care when you have no good measurements of cost, of KPIs, of mortality, OVR. And I can tell you that the system in Fakeeh is يعني we complain about it all the time of how sophisticated and how detailed. We measure around 300 to 400 KPIs regularly, and we present to the board and the huddles, and we're a culture of KPI and quality and patient safety. That's the second thing. Third thing is a network. You cannot deliver quality-based care when you have one hospital, tertiary care sitting in the middle of a city, right? So you need a network to produce that, and that's available Fakeeh from primary care to tertiary care to advanced. Fourth, you need a capacity to really measure patients' outcomes, patient-reported outcomes. And Fakeeh has been investing in this for many years now. It's integrated in our system. So we get regular reporting on patient-related outcomes. And let me explain this again. I mean, I probably explained this to some of you when we met face-to-face, but we as doctors sometimes have different priorities from the priorities of the patient. So your knee, for example, will be hurting. The doctor is measuring the bone density. So, you go to the doctor and he says, congratulations, I'm very happy for you. Your bone density increased by 5 points. The patient does not care about bone density. He cares about the knee is hurting him. He cannot pray. He cannot go shopping. He cannot sit on the floor. So the patient priorities are different from the doctor's priorities. And so patient-related outcomes is self-reporting of patients' real issues. To the recognition of that, we got the Golden Award from CHI in the last CHI Award for the best patient-reported outcome value-based care. We're now, one of our strategies, it's in the website, that we're trying to create a value-based care center and try to push this agenda. One of the world authorities in value-based care spoke in the most recent value-based care at 3CHI, saying that our medical director in Jeddah, Dr. Anas Bana, was the first ever international student to receive a master in value-based care in Texas University, which is the origin of value-based care, and so on. So I could go until Maghrib talking about our investments in value-based care. Now, the question is, how does this relate to investors or to people? So the moment the payment methods change to value-based, and value-based care has multiple flavors. So DRGs is as a form of value-based care. Capitation with community-based programs is a form of value-based care. So we are kind of ready for any changes that's going to come in the environment. So for example, if we say you're responsible for this neighborhood of 50,000 people, we're going to pay you 1,000 riyals per patient, per person. So you're going to do your community-based programs. We already have that. We got awarded for all the community-based programs we're doing. You have to do community outreach. You have to do good IT. You have to good. So, that's all part of our nature. So in summary, I mean, this is an area of passion, of course. If the government really moves towards value-based care, either in the form of DRG or capitation model, or so moving away from pay per activity, then there are people who are going to plug and play, and there are people who are going to have to spend 5 years preparing their system. So maybe that's a very brief answer. I'm happy to take more discussions on this later. So, but it's a complicated topic. It's not an easy topic, and value-based care is not successful in many countries. And that's, I think, I'm going to end with this. The trick about healthcare, my friends, is that there is no perfect healthcare system. There's no benchmark to say this is the perfect healthcare system that we have to all plug to. There is no perfect system.
You're very helpful. Reminder to the participants, we still have a minute or so. So if anyone has a question, can use this opportunity. They can ask question using the hand raise button or the chat box. As we wait for our another question or the last question, just wanted to get some sense on the guidance. Like, would you be willing to share guidance for the year?
Maybe if there's no questions, can we ask a question? I mean, this is not a one direct, Maybe one of our friends here can tell us what do we think about the Q2 results, and what's your expectations for the end of the year? Yani, it's
Well,
important we take your feedback as well. Any volunteers?
well, let me see. I mean, anyone wants to answer that, they can
That's
click on
called
the hand raise
value-based
button.
earnings call.
I'm
Correct.
sure there are sell side analysts also. So if no
Anyway,
one is willing,
if no
maybe
one is
we
willing to
can
take
take
the
that.
answer, look,
Can wait for a
uh,
minute or so. I'm sure
yeah.
there are both buy
Us
side,
can
sell side
answer the
analysts.
guidance question by the time somebody volunteers. You want to answer the guidance problem question, Panos?
Our guidance is that our margin in the next two quarters will be better than the Q2 margin. So this second half of the year is busy. So traditionally is stronger in terms of census. So we expect to do better in the next half of the year. Of course, uh, taking out any one-offs or extra contracts that may come, but take out the, let's say, the Hajj contract, we should do well in the second half. We'll see. I mean, we're optimistic. The momentum is there. I mean, we cannot tell more, but we are doing well.
Great. There's one question in the chat box, and this could be the last. And meanwhile, if there is anyone who wants to answer, uh, about the company's results, you can click on the hand raise button. So this is about the revenue payer mix. If you can share details like which payer contributed the most to your top line in Q2 or H1.
Our the contribution is relevant to the market share. I mean, look, we are our revenue and volumes are predominantly western part of the country. We see Bupa stronger in that part, where Tawnia is stronger in Riyadh, but Riyadh we have only a new hospital, so I would say Bupa is the major contributor, with Tawnia the second one.
Here, Ibrahim has raised his hand. Let's see. I mean, if, does he have a question or he wants to comment on your question about results? Ibrahim, please unmute yourself and go ahead.
Hello. Good evening, gentlemen. Am I audible?
Yes, Ibrahim.
Yeah, thank you, Madhu. I do have a question on Medina. So when it comes to the business plan for this hospital, is it as same as any other hospital, like the one in Jeddah and Riyadh, business as normal? You run it as specialized hospital, or you want to allocate, let's say, part of the beds to long-term care, some MOH, some seasonal demand, etc.
Let's take a little bit of that. I mean, it is a general hospital, so every specialty is there, so that's covered. But then we're focused on some more focus on some specialties, especially oncology and radiotherapy. There is no radiotherapy in Medina other than this hospital that's going to start activating the service now. So that's part. But then this is a very strategically located hospital. So as you know, a part of Duyuf Ar-Rahman program in 2030, there's going to be expansion of Al-Umrah and visits and Medina visits, medical tourism. So I think really, the potential of this hospital is not going to be realized, not financially, I mean, but the full potential, it's going to be seen down the road. If you look at Medina now, I'm from Medina. So if you look at Medina now and how it was
نعم والله.
5 years ago, 10 years ago, you can see the amount of infrastructure, projects and the attraction of people to Medina. So I think we're now talking with the Ministry of Tourism, the Ministry of Hajj and Umrah, and everybody's like, as long as you have, it's like having an apartment in a very touristic city, that helps you do everything in that city. So having the hospital there is going to open a huge strategic, file. So those are the two factors: general hospital, day to day, more focus on oncology and surgery and some other specialties, and then opening a potential for medical tourism, for attraction of Hajj and Umrah and Al-Ula. We're also talking to people. So yani, I think it's going to be a regional hospital rather than just a simple Medina hospital.
Correct me if I'm wrong. This is the closest hospital to Al Haram. So
Yes, closest hospital to Al-Haram, to
So,
Al-Ula, to Khaybar, to Uhud, to not the closest hospital. There is a small, closest regional
the
hospital.
closest full-fledged hospital.
Yeah, sorry.
full-fledged,
Yeah.
top of the range, full-fledged.
MashaAllah. But when it comes to the client mix, it will be different than the one in Jeddah and Riyadh, where 90% of your business is insurance, because it will be dependent more on cash and image. I'm assuming so.
To Professor Ayman's comment, we also receive some interest for business, as you mentioned. I mean, seasonal business from insurance companies. Maybe opportunistically, we might avail the offering, but the primary target is, as he said, oncology, point of reference in Medina, quality care. Is not for seasonal business or for long-term care. That was not our, design in our
Yeah.
mind.
Thanks. And probably this is the fourth month of operation, or the fourth month of operation, or the fifth one actually in August. How do you see the traffic so far? Is it that promising as you're expecting, as per the budgeting, etc.?
We could do better. I mean, again, we started in May, just after the Ramadan, before Eid. Now we start see the attraction, because, as I said, we completed the insurance contracts. A couple of weeks ago. So I would say in our next call, we're going to have better visibility on the how the community reacts to this hospital.
Great. Yeah,
الله يحييكم
perfect.
تعالوا زورونا.
Thank you. Inshallah, بإذن الله. Towards the end of the year and the winter, inshallah.
Inshallah. Most welcome.
يكون عافية. Thank you, Panos. Thank you, Mr.
Thank
Ayman.
you.
Wish you the best of luck.
Thank you, Ibrahim. So that was our last question. Now coming back to Q2 results, I think the share price is the best indicator, I would say. It was the positive reaction. You can consider that as an indicator that the results were better than expected.
Okay.
All right. So we do not have any questions. So any closing remarks from your side, and with that we can end the session.
I would like to thank you all for this interest in Fakeeh Care. You have our promise that we're going to continue focusing on quality, patient safety, continue to push healthcare in this beloved country, and continue to innovate, bring the best doctors. And hopefully we will see all of you as partners and investors. And we'd like to hear your critical questions, comments, criticism, and of course, some praise and a lot of prayers. Thank you very much.
Thank you. Thank you.
Thank you.
Rahman. Thank you, Mr. Panas and Walid.
Shukran.
Wish you all a nice evening. Thank you, participants, for joining the call. With this, we end the call.